This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, May 30th, 2016. Euro dollar. So the euro remains under pressure after breaking down below some key support in the 112 area, with a focus now on a retest of that psychological barrier at 110, which guards against more significant support at 108.23 further down. At this point, look for any rallies to be well capped now in the 112 to 113 area. Sterling dollar. So cable, despite recent gains, continues to be well capped on rallies ahead of that key resistance at 147.70, and while the market holds below that level and is unable to establish above, the pressure does remain on the downside, which could open a retest of that recent key support at 143.33. At this point, again, a break back above 147.70 would be required to force a shift in the outlook and suggest that a more significant base has been formed. Until then, the pressure does remain on the downside. Dollar yen. So dollar yen has been trending lower, although this latest rally is now potentially looking to compromise the downtrend if we break back above that previous lower top at 111.89. A break above 111.89 would negate a sequence of consecutive lower tops in this downtrend and suggest that the market is putting in a more significant base. However, inability to establish back above 111.89 will open the door for fresh downside back potentially towards that recent multi-month low at 105.55. Euro Swiss. So Euro Swiss has seen some setbacks off recent highs at 111.30, though ultimately the outlook remains constructive, with any setbacks being very well supported and a higher low sought out somewhere ahead of 109.55 in favor of the next upside extension beyond 11.30 and towards that multi-month and yearly high at 112 further up. Aussie dollar. So Aussie remains pressure to the downside, with the market consolidating after breaking below the 200-day moving average, with setbacks now expected to head down towards next key psychological barriers at 70, which guard against the 2016 base at 68.27 further down. Look for any rallies from here to be well capped into that previous support now turn resistance around 74.15. Dollar CAD. So dollar CAD has been showing signs of a major bottom after the market had pulled back up from that recent multi-month in 2016 low at 24.61. A higher low looks to be in place now at 27.72, with a break back above 31.89 to confirm and open the door for the next upside extension towards the 135 area further up. Kiwi dollar. So Kiwi remains pressure to the downside, with the market now focused on a retest of that recent key support at 65.46 going back to the February 16th. A break below 65.46 would then expose a direct retest of that 2016 low at 63.47 further down. Look for any rallies to now be very well capped ahead of 69. SPX 500. So the S&P 500 had been looking like it wanted to put in a potential top, although the market now has rallied all the way back above 2100, which compromises the topish outlook and potentially exposes a retest of that record high from 2015 at 2133. If the market establishes a daily close above 2112, it will almost seal the deal on a retest of that record high of 2133 and potentially open fresh highs beyond there. If, however, the market cannot establish above 2112 on a close basis, we could see another topside failure and reversal lower. Look for the market to break back below recent support around the 2075 area to strengthen the potential topish outlook, while ultimately a break back below 2020 would really be required to officially accelerate declines and confirm that there is some form of a top in place. Gold. So gold has pulled back significantly since stalling out just shy of that 2015 peak at 1307 when the market rallied just above 1300. At this point, the market has come all the way back down to 1200, though there is some significant previous resistance now turn support, some medium-term previous resistance now turn support at around the 1190 to 1200 area. Only a daily close back below 1190 would really compromise a more constructive outlook, with the market now looking to put in a medium-term higher low ahead of the next major upside extension back towards and eventually above that 2015 peak at 1307 and then towards 1400 further up.